Good morning, Paul Georgie from Allendale. It's May 5th, 2011. Looks like we've got macro selling across the board in commodities again here this morning. Grain markets tried to rally overnight on news about weather and potential demand, tightness in supplies, and all of those reasons helped us support the grain markets overnight. But once the 6 o'clock hour came here this morning, funds opened up the selling doors and became sellers of everything. The crude oil down $3.28 as we speak. Gold is down. Silver's down another $1.20 here this morning. That market has gone down from right near $50 all the way down to $38 here today. So finding pressure from fund liquidation and money flow, risk off type selling taking place here. All of those reasons we're seeing pressure in this market. And then the USDA came out with the weekly export sales this morning. Corn, the trade was looking for 350 to 650. Came in a meager 284,000 metric tons sold last week. Soybeans 100 to 300 was the estimate. Came in at 21,000 bushels sold, or 21,000 tons sold. And wheat, it came in okay at 550,000 tons. Trade was looking for their 300 to 600. So I think the market is definitely focused more on demand side of the equation here in the last several days, and looks like we could see some as we get more demand information. The ethanol numbers yesterday were lower than expected, 875,000 barrels a day produced. That's less than what we've averaged here since the beginning of the year, and less than what we need to meet the USDA's expectations. So that is another negative factor for the corn market. There's also talk out of Washington where Senator Grassley and some other farm state or Midwest senators have proposed the extension of the ethanol tax, but a reduction. The ethanol tax credit ends at the end of this year, and his suggestion is let's rather than get rid of it completely, let's reduce it to 20 cents in 2011 or 2012, and 15 cents in 2013, and then have it linked to oil prices after that. So that proposal is being talked about in the Senate, which certainly reduces that potential for corn consumption or ethanol production. So a bit of negative news there. The positive side of things, we got a USDA report coming out May 11th, the monthly supply demand report. Expectations there. Rich Nelson in our office has done the work on it. He expects that we could see yield drop down to 160.5 from the 161.7 that that the USDA has used currently, simply because of the late plantings. Weather conditions certainly should be supportive to price, as the weather forecast has put more rain in the forecast for the northern corn belt, an area that's extremely wet right now, and keeping the southern corn belt, the southern Midwest, Mississippi Valley, and the Ohio Valley with plenty of moisture for the next 10 to 16 days. So planting progress is going to be slow, but the demand side seems to be dominating news here today. Also, news coming out of China and India that their concerns about inflation. They are going to continue to attack that, and by increasing interest rates and controlling supplies of grains and food there. So that is not a bullish influence at this time either. The wheat market, however, should have bullish influences as the spring wheat plantings continue to be delayed. Last week it showed at 10%. This coming week we should be at 70% complete on spring wheat plantings. We're going to be nowhere near that level because of the wet conditions. And then you go up into the Canadian prairie and they're delayed as well because of the extremely wet soil conditions up there. So should find some supportive numbers there once we get through with this fund liquidation that we're seeing here for the last several days in the commodity markets. In the livestock trade, cutout values were lower, down 121 yesterday in choice, 131 lower in the select. The futures had a little hope yesterday, but again lower overnight, and based on the fund selling and the macro selling in this market. Hog prices coming in a little higher, getting some buying setting in there after a couple days of sharp down. Cutout values were 47 cents lower. Egg sets, something that we've been watching very closely because pork has had tremendous competition from poultry and poultry products. Egg sets were large, and that suggests that over the next 8 to 10 weeks we should see plenty of chicken available, and going to keep the competition thumb on pork prices. So we're going to need to see reduced supplies there or some greater export demand in order to help us slow down this sell-off in the pork. So we've got a lot of things going on here today. Sorry to say, not a lot of friendly things going on, but stay tuned to Allendale's research. We'll keep you informed, give you some ideas on how to handle the situation. You can reach us at 800-262-7538. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.